Hello guys and welcome to my channel. Today we are going to be talking about AMC and how you can play the options for AMC this week. There are many different talks online about AMC and how it's a meme stock, but many channels are not giving you information on strategies that you can use to utilize and take advantage of the current movement. Go Ape Nation, Diamond Hands holding strong. This is not financial advice. I am not a financial advisor. This is for entertainment and educational purposes. I'm only here to share my opinion, and my opinion is worth a dime a dozen. The only thing that I can show you is that I was able to turn $426 into well over $12,000 at one point in time and investing in AMC. So if you're interested to find out more about your option strategies that you can take, feel free. At the current moment, I will show you what my current portfolio looks like because AMC has gone down since my initial investment. I am still currently showing a total gain of $6,430. And again, like I said, this is currently based on an investment of a total of $426. This is based on these two call options, and I will show you them, and then I'll jump into the trade options. I know you are not here for my portfolio information, but just wanted to show it to you guys so you can see that what I'm providing to you is concrete information and the truth. As you can see, I bought this contract for $240 on May 25th. So the cost was $240. I've made a total of $3,173. It is currently on a decline. Okay, so now let's go take a look at my other option. I believe I paid $186 for that one, which is why my total is $426. That's when you add $240 plus 186. That's a total combined of 426. You can see here I bought it for 186. I am currently down 312, and this is pre-market, and I'm up a total return of $3,257. So that's currently over 6,000, and that's because I've suffered some loss, as we all have if you're in it for the long run. That's from AMC going down. Since we're going to be talking about options, I feel it's also fair that I go back and I show you what I have also done with AMC, because I did have an option that I exercised Friday, the 4th of June, which I had no choice because I did buy that contract to expire on the 4th of June. This is a pending contract, so we're going to ignore that. I'm hoping the price will be in my favor and that one will execute. So in the meantime, let's go back and take a look at my other activity that I had for AMC. Okay, so here I have a couple of other limit buys that end up closing out, and I made a couple small return on these. So this was a 4-leg spread, and I was able to make $250 on that. On that one, I did buy 5 contracts, and I'm going to show you my other one. On this one, I bought it for a June 4th close, and I was able to get this filled on the 3rd. And the reason The reason I went ahead and exercised this contract, not exercised it, but the reason why I end up closing out this contract on the 3rd was I was following the market and I felt that on the 4th, I didn't have the chance of it going back as high. And I was right. And so I went ahead and put in the order, and it did close just about 2 hours, 2.5 hours before market close on the 3rd. So that was a good gamble on my part. So now let's take a look at how much this contract actually cost me. Okay, so I did buy a call for $30 for June 4th. Let's take a look at the costs. As you can see here, guys, I have many cancels. I tried to get in on the market many times and it did not pan out the way I wanted it to. So I end up closing many of them out or canceling them out. All right, so here we go. So this one, the one that I made the $3,400 on, I bought this one on June 1st and I closed it out on June 3rd. So in 2 days, I was able to make $2,900 based on spending $500 on this contract. So I'm going to show you guys what I use to come up with some of my strategies. Again, this is not financial advice. This was very risky. I spent $500 in hopes that the stock would move in the direction that I wish it would. And so I can't advise anyone to make such risky trades, but it ended up working out for me. And here are the purchases for the 3 option orders. Like I said, I did buy 5 of those. So I spent $20 here, and as we can see up here, I turned that $20 into $250. All right, so guys, let's jump into some strategies now that you see my return on how I've invested in AMC and what it has profited for me. All right, so let's go back to AMC. Previously, it closed at $51.34, and it's currently $47.91. And it keeps going down after hours, as we can see here. Again, this recording is, the prices are based on the time of this recording, and this is being recorded June 6th in the middle of the night at 3:34 a.m. All right, so AMC. If we take a look at the financials, we all know we're not really here for the financials. Some of you might be, because there are some choices that AMC is currently doing that could help it to rebound. But if you're not here for that, then the financials won't help you. But basically, if you're taking a look at the numbers, I can see why there is so much news information out there telling you that it's not worth the price. Clearly, we all know that. If we take a look at the numbers, it's not in the company's best interest. Net income is going down, down, down right here. So since 2028, since 2019, the net income has been going down, and now we're talking about exponentially going down. Like, this is a major snowball. Like, that's an avalanche. And if you take a look at the balance sheet here again, same thing. The blue is the total assets, and this green is their total liabilities. And it just gives you an information of their debt to asset. For example, 127.81%. So their debt is so much higher than their income. So again, avalanche. This is an avalanche. We're not here for the financials, or some of you might be, but most of us, I think we're here for the meme. We're here for the short squeeze. So let's jump into it, guys. Okay, now on to our options choices. So I'm going to show you, I'm currently looking at AMC. I've already pulled up the ticket symbol, AMC, and we can see the price is currently at $47.91. If you're looking for a short-term trade, I've pulled up some quotes for June 11, 2021. I believe that only gives you like 4 days to see some profit turnaround, if that's something you're looking into. But based on this $49 strike price it has a 541% volatility. That is highly volatile, you guys, highly. So based on this information, in order for you to purchase this option contract, it's going to cost you roughly $1,100. And as we know, when you purchase a call, you stand to lose what the cost is. So you could lose the full 1.1K. And your max profit is unlimited potential. But let's take a look at the real profit and loss based on this particular option of a $49 strike price expiring June 11, 2021. So as you can see, this is roughly 4.6 days. By the time you guys see this, it's going to be in the morning. So it'll be about 4 days to turn this around. And profits and loss, if we were able to make any profit from this trade, here are the prices that you will need the stock price to hit in order for you to actually profit from this. So for example, this is our current price, right? Which is the $47.91 at the time of this recording. If we were successful in getting to a price of $55, which we already know our break even is 49. So anything past 49, we're going to be in the green and making money. So if we get to $55, a stock price of $55, we can stand to make a profit of $459. Now, like I mentioned previously, the entry of this contract is $1,100. So we are gambling $1,100 in hopes that if we get to 55, we would make $459.90. In reality, we could call that $460. So we are risking $1,100 in hopes of making $460. So right now, the volatility is not really in your favor, depending upon your own risk tolerance, to be fair. But if you think that the price could go to $66, for example, you could make a profit of 1.3K in just one day. So if Monday you wake up and the stock prices go up to $66, your $1,100 investment would turn into 1.3K. Let's continue to follow this $66, right? If you decide to hold on to your contract because you're trying to diamond hand and ape strong, let's say for the week to June 11, the price never goes past $66. I want you to understand what you're up against. You do have time value against you on these contracts. So the next day, so if we go to June 8th, right, that will turn into a profit of 1.1K. If we wait to exercise it on June 9th, 966.8. If we wait until June 10th, that drops down exponentially. It's now $840.90. If you actually exercise it on the day of expiration, that now is roughly half. It will be worth $661. Okay, so now you have to ask yourself, many times we see this, everyone is like diamond, ape strong, diamond hands, but you have to understand the time decay that's against you. And that's really important to understand, because this was something that I didn't understand as well when I first started investing. And many of my options that I had were making a lot of money, but as time went by, time was working against them, and so they were losing money, and I didn't fully understand that, but now I do. I just wanted you guys to also understand that time decay does work against you. We're talking about a major difference. Your profit could be cut in half. So I don't think there is any shame in taking out your profits when you think it's going to be in your best interest based on your own personal judgment. Or you can take the judgment of others, but at the end of the day, you are responsible for your own actions because as of right now, you have to be an adult to invest. So, as an adult, this decision is your choice. So, let's take a look at this. Let's say you're fortunate and I think we're all thinking this stock will go over $100 by the end of the week, right? By June 11th. So, if that is the case, on June 7th, if you do invest in a long call expiring June 11th at the $49 strike price, if it does go to $110, you will profit 5.2K. That's a great investment. Now, was that 500% up on your original investment of 1.1K? Now, if you decide, okay, let's say the stock only goes to $66 on June 7th, but you believe in your heart it's going to go past 100. So we're going to keep looking at this $110 strike price. And we wait until June 11th at the date of expiration. In your favor, it would move much slower, but that's only based on us using the current implied volatility of 541%. So on expiration, you would actually make 5K. This is only down 0.2K from the initial. So as you go further up in the money, your decay from the price, your net profit is going to slow down as well, right? So if you go up, like for example here, as we mentioned, if you were 66, strike price 66. I'm trying my best to explain this the most simplified way. They said the best way to explain things is trying to explain to a 5-year-old. So please don't be offended. I'm trying to bring this down to a 5-year-old level. So what I'm trying to say is if, for example, on day one, we got to $66 and we did exercise it, we'd get 1.3K. But if we waited until June 11th, we'd only get $661. But if we do wait for it to get to 110 on June 7th, we would make 5.2K. But if we wait until June 11th, we'd still make 5K. So it would be you'd only lose $200 just to sit it out and wait to see if it could go from a leap from 66 to 110. So your net loss on this is about 50% on the closer you are to the strike price. But the further you get from the strike price, your net loss from time decay is slowing down. I hope that made sense. I don't know how best to explain that in a more simplified way, and I apologize if that did not come off as I was hoping. But the further you are in the money from the strike price, the less it takes away from your profit. I hope that I hope that helps you guys. All right. So now, based on the current volatility of the market, we can see that if you go below your strike price, as the day goes on, you can get further and further into losing your money. And the further away you get from the current strike price, the more you will start to lose in your option. So that's something to keep in mind. All right, guys. So now let's say if you think this contract is not for you, you can try to push this out a little bit longer, right? You can try for a June 18th, right? Let's try for June 18th. We'll do the same $49, June 18th. Okay, so now let's say we want to go ahead and purchase for a June 18 call for AMC, right? So now we're taking the same strike price of $49. Let's take a look at how that looks, expiring June 18th. As you can see here, I've selected a call for $49, expiring June 18, 2021. And this one, the spread for the range is $15.20 to $15.35. We're taking the median price, which is $15.28. Now, previously we paid 1.1K, but in this case, for the June 18, we're going to pay a little bit more to extend out our expiration. We're going to pay $400 more roughly. So that will bring us to 1.5K. Our implied volatility has also changed. Previously, it was 541%. Now we're currently at 474%. Our max loss is our initial investment, which is 1.5K, and we do have the possibility of unlimited potential as long as our price goes to $49 or above. And $49 strike price is our break even. I also wanted to go back and explain that when we're buying a call option for $15.28, we're initially really controlling 100 stocks. So the price of $15.28 is multiplied by 100, which would give us 1,528, which rounded off is 1.5K. Previously, I did not explain that on the 1.1K, so this is my correction of not fully explaining that. All right, so now let's take a look at our profit and loss potential. In this one, you can see that if we hit our strike price, previously we were looking at $66. And so this time we're going to look at $65 and 117. All right, so we have some time for a little bit more gain, but we'll just start at 65 because we haven't hit 78 yet. So I don't want to use a number that we haven't hit yet. We're going to use a 65, but I also want to use a number that people believe we can go to for the top range. So we'll use the 117, right? Most people think we'll go to 100, 125, 150. So we'll use 117 on this longer call. And by the way, for this particular one, we can see that we do have a little more time play in our favor here. We have 11.5 days. And again, based on when you're watching this video, if you're watching it in the morning of June 7th, you will have 11 days. So let's take a look at our profits. Let's use the $65. If you put down your 1.5K, the stock goes to $65. You stand to profit 1.2K that day. That is not bad for a good day's return on investment. If you waited until June 18th, or let's use two different markers this time. Let's say June 11th, you feel like exercising that contract, closing the contract and taking your profit. You would close it out at $883.30. But if you wait until June 17th, you would make June 18th. That's when it expires. But if you wait until June 18, you're looking at 72.5 for your profit. Now, if we go ahead and take a look at the 117, if you exercise it on June 7th, then you are looking at 5.7K for your initial investment of 1.5. I think that comes out to roughly about 400% gain on the day. So very good return on investment for the day. If we waited until June 11, you're looking at 5.5K. Again, that time decay, the more you're in the money is less here again. So not a far difference from your drop off versus 1.2K to 883, right? Now, if you go ahead and wait until June 18, you're looking at 5.3. Again, still not a bad loss to wait it out a little bit longer to see if you could get things to turn around. And again, this is really based on your own personal views. If you think it will, if you think it won't go past 110, then you'd be looking at 4K, for example, on June 18th. If you kept holding Diamond Strong, if you believe it won't go past 100, but you're willing to take this at the 91 or somewhere in that range, you're looking at 2.7K, right? And that's for your initial investment of 1.5K. But if you took this profit on day one, it would have been 3.4, which is a price difference of 0.7K, right? So now you just have to really think about these different choices when you are playing this market, as far as making your choices for options. So these are some options for the next two expiration dates, which is June 11th and June 18th. I think this video is going to go on too long, and so I'm just going to stop the video here. And oh, one last thing. Sorry, guys. One last thing. The further out you go, it's going to cost you less. So if you wanted to go, let's say, let's do some really high numbers here, guys. So we've been in this 72 in the last 52 weeks. So let's go for a $70, right? Let's go for a $70 price. Let's see what that looks like. To get in this contract for $49, it cost us 1.5K, right, for the expiration of June 18th. But now we're looking at the $70 strike price call, and we're going to spend 1.1K. Our implied volatility is now 502%, and we stand a loss of our initial investment, which is the 1.1K, and we have unlimited max potential of profit. But let's take a look at what that looks like as far as the numbers for you guys. If you are so fortunate to make it past your strike price, because we have to make it past 70 or above to be in the green, right? So here we get to $76. You could make 1.7K. If we make it into the hundreds, let's say we make it to the 114, now you can make 4.7. If you decided to hold your contract because you believe we're going to go past the 100 mark and we go to June 18th, you could make 3.3. So guys, again, this information I think is very helpful because you get to see the difference and you can understand the difference. All right, the closer you are to it, it's going to cost you more money. Yes, the initial investment is far higher, but I also know that the initial return is also better. So you can take that with a grain of salt. Again, not financial advice, but numbers don't lie. I only show you the number, and then ultimately you can make the decision for yourself. All right, and with that, I think I have talked you guys to death enough. So I hope this information was helpful to someone and you can make some choices that's in your best interest, as this is not financial advice. I am not a financial advisor. I am just someone that is trying to build generational wealth and hoping to help others along the way. So if you are enjoying the ride with AMC and you've been making profits, give this video a thumbs up. If you've finally found information about volatility and how it's going to affect you with time decay and option choices and just a little bit more information and you found it useful, give the video a thumbs up. If you don't find the information useful, please leave some comments and let me know what I could have done differently to improve. And if you find any value, also provide that feedback as well. Good and bad are all helpful so that we can all learn together. So I know what to provide and you guys know what to expect in the future. I hope this information was helpful. Again, I just wanted to give you guys a broad view of what it looks like profit wise if you were to invest in options. And again, you can play around with different numbers. All right. You don't have to take the $49 strike price. I take the $49 because it's the closest to where the market is currently. And the probability of getting there is much better. Guys, Diamond hands, ape strong. Let's get it. Let's get this money. All right. AMC is going to make a lot of people wealthy and a couple wealthy people not as they were previously. All right, guys. So that's it. And I am out. You guys have a great Monday and I will aim to post videos every day. And please check out my other videos if you want to see different types of options. This one was just showing you a long call option, but I will have videos for different options as well. So check out my playlist for AMC and have a good one. If you're looking for platforms to trade on and you'd like to get started, please check the description box. I've included some links for you to get some free stocks and a couple of places you don't even need an initial investment to get started. So check out the links in the description and grab your free stocks from my affiliate links. You get a free stock and I will get a free stock as well. Thanks for your time.